Thanks for tuning in and welcome to Talk ETFs, ETF.com's weekly video series. I'm Sumit Roy, Senior Analyst for ETF.com, and today I'm joined by Bryan Hinmon, the CIO of Motley Fool Asset Management. Bryan, the Motley Fool currently has half a dozen US listed ETFs, the largest of which is the Motley Fool 100 Index ETF, which has over $500 million in assets under management. This is a fund that invests in the 100 largest US companies that are either actively recommended by Motley Fool analysts or rank highly in the Motley Fool Analyst Opinion database. Last I checked, the fund is up something like 105% since inception in 2018, which compares to 70% for the S&P 500. What do you attribute that outperformance to?
The last 5 years have really been a period where the market has rewarded the largest, most dominant firms. We can see that this year with the performance of the Magnificent Seven. So TMFC has really been benefited from its positioning because the index underlying it has not been bashful about making large bets about the continued greatness of those firms. But I think an important piece that has also contributed to the good performance is simply how the index is constructed. One of the hardest things for investors to do is to hold on to winners. And because TMFC is structured as a market cap weighted index, it allows the biggest and most dominant firms that are experiencing the most success to become a larger part of the index and drive returns.
Bryan, one thing that stands out to me is that this is technically an index ETF, but it's really an active ETF under the surface because it depends on the research and stock picking abilities of Motley Fool analysts. Would you agree with that?
Yes, that's correct. We call it the passive implementation of active stock picking. So the Motley Fool's been around for 30 years, providing regular stock recommendations produced by humans. That creates one half of the universe from which the index is created. The other half comes from the army of analysts that work for the Motley Fool who are updating their own high conviction recommendations inside an internal database. That pool together creates a rich universe for the index to be constructed in a forward-looking sense with high conviction recommendations. Now, the best of passive is where my team comes in, and we simply apply a rules-based implementation to track the index over time in a disciplined manner.
Gotcha. So, Bryan, this is a very tech-heavy ETF. Do you still believe tech stocks have the ability to outperform going forward, given the big run that they've already seen?
Yeah, I think whether or not a company is classified as a technology company by sector is really missing the point. What's truly important is the impact of technology on a business, how the business is using technology to transform its operations, how its competitors are choosing to use technology, and whether or not a company is forward-thinking in that respect. And so I think the bottom line here is that companies that embrace technology are on their front foot will continue to do well for the long term.
That's great. So speaking of tech, how do you see AI impacting tech stocks in the stock market in general? Some people have said that the impact on revenues and earnings from AI has been modest so far. Do you expect that to change?
Yeah, the impact on revenue and earnings really has been modest so far from AI, with the exception of NVIDIA here in the United States. AI as a technology has been around for decades, but it wasn't until generative AI came around very recently that it captured the hearts and minds of businesses and consumers everywhere with really what's possible. And it sure seems to have driven up pockets of the market. I think what we're finding now is that companies need to be on their front foot with this technology, given how it can impact every aspect of every business. Large and small, including Motley Fool Asset Management, need to be assessing their unique data sets right now and the tools that are available through AI to unleash their highest value employees.
That's great. Finally, Bryan, before I let you go, I have to ask you, the Motley Fool has an incredibly massive media presence. You've been around forever. How important has that media presence been in attracting assets to your ETFs?
It's been extremely important. For 30 years, the Motley Fool has been working alongside retail investors through market ups and downs, through good times and bad times, with humor, with energy, and with optimism, and has built a community that is really quite special over the course of those 3 decades. That trust has found its way to us and has helped given retail investors the confidence they need to put their money with us. And so we are grateful for that.